You have your retirement account set up and you also have savings, but you're wondering if there's more you should be doing with your money. So you're looking into brokerage accounts. Well, before you open that account, there are some pros and cons you need to know about. Welcome to the Wealth Twin Show. Nicole, what's a pro they should know about before opening a brokerage account?
I mean, one pro for a brokerage account has to go with estate planning.
Mm,
And this is based on a concept that they have that only really benefits you if you have a brokerage account, and it's called step up in basis. Now, if you didn't know, the assets in your brokerage account can actually be inherited to an heir of yours after you pass. This step up in basis is beneficial when it comes to taxes on capital gains. So let me explain. Whatever assets you have in an account, no matter where you bought it, right? If they go up in value and your account is inherited, the person that inherits your account, the capital gains that they pay on that asset only is on the market value that the asset is when they actually inherit it. So, for example, say you bought Apple years ago, like 20, 30 years ago, and you bought it for like $10. We'll just give an example. And then if you pass, when you pass and your heir inherits it, and that market value of your Apple stock is now $1,000, they don't have to pay taxes on the gain from 10 to 1,000. They only pay taxes on the gain from when they received it when the market value is 1,000 until when they actually sell it. So if it goes up to 1,100, they're only paying that tax on the capital gains of $100. So that's a great benefit when it comes to having a brokerage account. You cannot do that in, say, a traditional IRA or even in a 401k, for example.
yeah, I agree with that. I would say another pro for a brokerage account, especially when I'm looking at them compared to retirement accounts, is that there is no contribution limit. Okay. So when it comes to, like, say, a 401k, you're only allowed to contribute up to a certain amount each year, right? So let's say it depends on the year, but I think right now it's around 20,000. You're able to contribute to that. But when it comes to a brokerage account, you can put as much money into that brokerage account that you want. There's no limit. So let's say you max out your retirement accounts and you're looking to see what you can do with the rest of your money in order to help it grow for your future. Because there is no limit on a brokerage account, you can invest that money into anything you want into a brokerage account and have it grow for you without worrying about hitting some limit on how much you invested for the year. That is a good plus for me because I don't want to have limits on what I can do with my money. I want to have enough options for me to be able to grow my money other than just having it sit in a savings account.
Now, when you're talking about options, another option that you have, and it's a pro for a brokerage account, is the amount of investment options that you have
True.
available to you. If you're just investing in your retirement accounts outside of the Roth IRA, I would say, but if you're investing in, say, like a 401k or 413, 403b for your account, you only have access to the investment funds that your firm allows you to have access to. But when you have a brokerage account and you're investing in that account on your own, you can invest in any type of investment that you want. So it could be single stocks, it can be ETFs, it can be index funds. All those things are available, and even some accounts allow you to invest in crypto type assets. So all those available to you in brokerage accounts, but they may not be available to you in your job's retirement account.
Yeah, I agree. There's a lot more freedom in what you can invest in a brokerage account, and you get to pick the securities yourself. So you should definitely look into it as a supplement to what you're investing in with your retirement accounts. Now, Nicole, we gave them some pros. What's a con to having a brokerage account?
No, no, before I got one more pro that I think they
Okay.
might like, Nani. So let me get into that.
Okay,
Another
go ahead.
pro, and it really only makes sense when you have a taxable brokerage account, is this idea of tax loss harvesting.
Okay.
Now, it sounds complicated, but what it really is a way to make something that could be seen as bad, like a loss in your account, actually turn to your advantage. So there's three reasons why a tax loss harvesting is actually beneficial for you. So we're going to talk about gains. Whenever you have an investment and you sell it for a profit, that means you made a gain. Now, every year you do that and you make a gain inside of a taxable brokerage account, that gain is taxed on a yearly basis. Now, here's where tax loss harvesting comes in. Maybe some of the investments that you have are currently at a loss. If you sold those investments and you taken a loss in those investments, you can actually have those losses count against the gains you make. So therefore, you're not paying as much tax as you normally would. Say you made 5,000 in gains, but you had 3,000 in losses. You only have to pay taxes on the 2,000. That's the difference between your gains and losses. Now, here's another thing that goes with tax loss harvesting. Say your losses outweighed your gains. So instead, you sold some investments, you made some gains, and they were 5,000, but you also had some losses. You can actually purposely sell things at a loss, and say those losses added up to 10,000. You actually wiped out your gains, so you don't have to pay taxes on those gains for that year. Now, you can also move that money that you have that's still a loss. You can actually lower your regular income taxes, and because you can push that loss into another bucket that the government allows you to actually take losses and actually reduce your regular income by that. Now, there's a limitation to that, but that's something you can do. And if your loss is still, you still have a loss that you can carry over even after the max out that you could take as a loss for that year that the government allows you in your regular income. You can actually push that loss forward to the next year. So it's basically like a loss that turns into advantage that you can keep on getting and taking advantage of on a year-to-year basis. So it's pretty cool. So that's a benefit that really only makes sense in a taxable brokerage account, because the other ones are tax deferred. So you're not really trying to sell things at a loss or a gain until it becomes beneficial for you. So that's why tax loss harvesting actually is a benefit that you can only get, and it's a pro of a brokerage account.
Well, because you brought up taxes on the gains and everything, I will bring up a con when it comes to the brokerage account in regards to being taxed on the gains, right? When you look at a brokerage account, if you sell something in that brokerage account, you're going to be taxed. If you sell it before holding it for a year, you're going to be taxed at your regular income tax rate, right? If you sell it after a year, you're going to be subject to a tax around 15 to 20%, depending on your income for that year. That is one of the disadvantages when it comes to having a brokerage account, because that doesn't necessarily happen in retirement accounts. Either the tax is going to be deferred or you don't pay taxes at all. Now, also with that, you have to look at dividends. Dividends are income payments that you get by holding a security. Dividends are taxed, whether you reinvest the dividends or you take them as cash payments when they're in a brokerage account. Unlike if you have it in a Roth, those dividends are never taxed. Okay. So that's one of the cons I would say when it comes to having a brokerage account. Look at those little things. You can do some things in order, like Nicole said, like tax loss harvesting. But when it comes to dividends, that's looked at as income. You will be paying taxes on it.
Now, another con that you may be aware of, you may not be aware of, it might not be a big deal to you, it might be a big deal to you when you are comparing a brokerage account to a savings account, right? At a
Mm,
bank. You can't deposit cash in a brokerage account, right?
mm.
You can go to a bank, take your cash and actually put in your savings account or your checking account, but you can't do that with a brokerage account, okay? The only way you can deposit money like straight away would be with a check or linking that account to your bank and then having the money transferred to your account, but you can't put cash in. So with that, since you can't put cash in and it's not very easy for you to do, you can't do that. It's also you can't take cash out of the brokerage account. You will actually have to have some either cash inside the account that's not being invested to easily get the money back, or you have to sell some securities and turn it into cash and then still do the transfer. So it's not as liquid as a savings account would be or a regular checking account would be, because you can't deal with cash.
I wouldn't say it's less liquid. I would say it's not as convenient to get your cash in and out of that account as opposed to a savings account. Now, if you have one
Hmm.
of those brokerage accounts that come with a debit card, it's a little easier for you to get your money out. But if you don't have any cash sitting in that account, you would have to sell something in order for that cash to be deposited and then have that money moved over to the bank that you do have a debit card with or whatever, or you can withdraw cash from. Um,
Yeah, not many people still deal with cash. It's becoming less and less frequent in our society,
yeah.
but you still want that option. And that's something that could be considered a con when it comes to brokerage accounts.
I agree, especially when you have kids and they have birthdays and they get cash for their birthdays. You want to be able to deposit money into the custodial accounts that you have for them. But if you can't, you got to go the little longer route, put it in a regular bank and move it over. I
Yep.
would say another con would be is that depending on what country or region you live in or you're from, you may not be able to even open up a brokerage account. Now, there's some US federal laws and regulations that prevent you from opening a brokerage account depending on the country or the region that you're in. This is regardless if you're a US citizen or you are a non-US resident, right? This also happens if you are happen to live in the US, but depending on the country and region you're from, you may not be able to open up an account. Now, we heard this for several people. You may be restricted on opening an account. Sometimes, depending on the country, they might allow you to open it up, even if you're a non-US resident, but like you don't have a green card or you're not a US citizen. You can still open up one, but you might be required to have additional paperwork ready to show them and verify. So just be mindful of that. Depending on where you are located or where you're from, you may have difficulty opening up a brokerage account.
You know, Nadia, another con now that you reminded me, because a lot of people do ask us about brokerage accounts and they have some questions when they're opening one.
Mm.
It's about a feature that's in a brokerage account, which is opening up a margin account inside your brokerage account. Now, it might seem like a good idea. A margin account allows you to have leverage, right? It gives you kind of a line of credit or be able to take a loan from the brokerage firm. Now, why is that a bad thing? It sounds like it could be a good thing. Well, the bad thing is that because it's leverage, you can actually lose more money than you actually put into that account and end up owing the brokerage firm money. Plus, whenever you take a loan from a brokerage firm, you just take the amount of money, but also you get to be charged interest on that. Now, this could be a good idea because people like leverage because you'll be able to take the money that you get from the brokerage firm along with your own money that you have in an account and maybe buy more investments with it. However, that's a great idea when the market is with you on the way that you want it to go. But if the market moves against you, you'll be called out on that margin. You'll be called out on that loan that the brokerage firm gave you. And if you don't have enough money in the account, they can start selling your investments that you have that you don't want to sell. They don't have to tell you which ones they're selling. They can sell whatever they want. And on top of that, if you sell all your investments and you still owe them money, they can go after you on their own to get that debt collected. So this is the feature that many people like to use because it sounds great, especially in options trading, things like that. But if you don't understand how dangerous this can be and how leverage can be a benefit but also a sword, you can definitely get yourself in trouble. So that's a con I see in a brokerage account because you can't do a savings account. They won't give you a line of credit. They won't give you a line of credit in your 401k, for example, but they will if you have the right credit score and you show that you have the right assets. You could get a margin loan from the brokerage.
Now, guys, if we use any terms you're not familiar with, don't worry because in the description below, we have a free PDF that's called the 25 must know terms when it comes to investing, right? Just download that. You'll find it useful. Let us know. And it gives you 25 terms that will help you start this investing journey. Okay. Now, guys, if you like this video, make sure you give this video a like and share it with someone you care about.
See you in the next video, guys.
See you in the next video.